right, joining us now to talk about the big picture, AI, and a little bit of everything, Ted Thatcher, President, Bright Lake Wealth Management. I'm so glad you're with us. What's the latest narrative when people are talking about AI? How are they feeling about AI?
You know, Nicole, when we think about the markets, it's like Wall Street has spoken and said you have to own assets or get left behind. And we're seeing that narrative kind of that we saw so much in 2025 come back a little bit. You know, there was so much talk about how the Mag 7 was driving the returns across the market, dragging the market up. We're seeing that with a little bit of a different nuance, a little different flavor now. Really, it's the bottleneck, if you will, of AI. And so we're seeing, of course, that come on the memory side. We're seeing the data center build outs and that $800 billion of CapEx flowing into the hands, and we're seeing the market drag up because of it.
Yeah, we went from the 600 billion to the 800 billion on these hyperscales and the sailors and the spending. It was a mixed bag as far as the Mag 6 up to this point. We'll wait for NVIDIA on the 20th. I was saying how Amazon, Apple, and Google had some up arrows. Meta and Microsoft came under a bit of pressure. When you talk about, is it the Mag 7, should they stay invested in this group? Because even though there might be a lot of spending that's going on, are you out if you're not in them?
You know, absolutely not. You know, I don't think you have to own every single one of them. I do think that you want to be a part of the Mag 7. Obviously, it's been a huge driver of gains, but we do want to be thoughtful about it. You know, what's driving right now, the highs that we are seeing with, Amazon and Google leading the pack there is margin expansion. We're seeing gross margin expand significantly on the cloud business, and we're seeing ultimately actually net margin expand. And I think that that's what the street's liking right now. And so that's where we have, positioned ourselves and our investors.
So I saw you have some opportunities when you say, you have some of the Mag 7 names, but then you also have a name like Oracle, right? Yeah. Where do you see the big tech buying opportunities?
You know, Oracle's a really interesting one, Nicole, because I think that, the street's almost forgotten that it's one of the 4 hyperscalers. It's the fourth of 4. And, of course, it hit its highs last fall and had a huge drop, losing 48% of its value. But it's almost like we have forgotten that they have this cloud compute for sale. We saw so many CEOs, Micron, Andy Jassy mentioned if they had more to sell, they could sell it. And that applies to Oracle as well. Also, just from a valuation standpoint, I think there might be an opportunity there. And if I could add a technical one, I'll quote Charlie Munger here. He always said, if you just bought amazing companies on the 200-week moving average, you would outperform the S&P 500. The problem is most people don't have that kind of discipline. And Oracle, when it was at about 140 a share, hit that technical marker. Yeah. Obviously, it's come up a bit from there, but I think it may present an opportunity.
Yeah, and I think about it here at 179. Let's just look at the big picture and what maybe some of the recent calls are too. How what we're seeing here for Oracle for 1 year, it's up 23%. So it is on a bit of an upswing. The high was 345. The low was 134 most recently. So you think it's on this upswing. Let's talk also about the K-shaped economy or recovery. Sometimes we hear even from the airlines, they say they have much more demand for premium seats than they do for main cabin. What's going on there?
So I think a lot of the discussion around the K-shaped economy has been really almost focused on income, and it's now shifted to assets. I feel like when we ask the question, hey, how's the economy doing? We have to make this distinction. Are we talking about the financial economy here on Wall Street? Or are we talking about the real economy on Main Street and how consumers are affected? It's really, I think, part and parcel of what we're seeing happen right now with the war in Iran. The markets are totally, divorced from what's going on in Iran. And meanwhile, consumers don't have that luxury. We've seen the price of oil now over $100 a barrel for 2 months? And that energy increase is ultimately, it's going to have to move its way through the economy, affecting Americans' pocketbooks. We saw the PCE print come out last week at 3.5% year over year.
When we think about the AI concentration narrative, you're still hot on AI, right? People shouldn't, even though there may be some slow points you still love it, right? Do you love it?
I do. I think that we are really in the early innings here. I saw AMD's CEO come out and say, hey, we're in year 2 of 10 of this AI infrastructure build out. I think it was Morgan Stanley. I'm not certain. they revised all these CapEx expenses expectations for 2026 to that $800 billion number. And next year, we're looking at $1 trillion. The street is demanding ROI on that spend. And actually, coming out of this earnings season, it seems like we're getting the first glimpse to that revenue increase. And as I've mentioned before, the margin expansion on the gross and net side.
And that brings us to some of the infrastructure. I mean, because you have names like Lumentum, right, as a name in there. Let's check those out. Why? You had Lumentum, you had Coherent for photonics, right?
Absolutely. So, when we think about data center build out, of course, we want to think about the big names. NVIDIA comes to mind immediately. But in order to build out these data centers, you actually have to have connectivity. A lot of times when we think about computer connectivity, we think copper. We know these wires. The problem with copper, though, is it doesn't transmit data fast enough and it gets super hot. And these data centers are massive. Companies like Lumentum and Coherent have gotten multi-billion-dollar deals with NVIDIA. Why? Because they have an unbelievable technology at the photonics layer. Think about it as the plumbing that connects all these chips together in these massive data centers, allows them to transmit, of course, a tremendous amount of data very quickly, and really, very, very importantly, it doesn't get too hot. It stays cool.
Yeah, and look, I mean, we almost crossed $1,000 for Lite, L-I-T-E. This stock has been incredible. The stock is up almost 1,500% in 1 year, up 1,464% for Lumentum, and it has gone from $60 to nearly $1,000. The high is $997. So I guess you think we're crossing the thousand soon enough. Right, easy peasy, right? Ted Thatcher, President Bright Lake Wealth Management. Thank you so much for being with us. Great to see you, Ted. Thanks.